Hello.
Hey,
How's your
hello.
Tuesday
Hi,
going?
Scott. Good. Hey, Andy. Hey, everybody.
Hi, Steve. Hi, Scott. Hello, everybody.
It looks like we were able to put together 2 weeks, two every other week in a row here, which is
Mhm.
nice. It's been a while, but technically speaking, if you didn't realize it, I was gone all of last week. I've been like totally disconnected from the market. So, with that in mind, we'll keep that as uh, the flavor of the webinar as I talk about what I've been doing and just basically slowly getting back into the rhythm of things after disconnecting in Cabo for a week. So, got some things to talk about. Hello, Dave. Hello, Davids. Everybody. People still coming in. Just a reminder. Andy and I trade our own accounts. We've been using trade ideas as both, customers and now we're employees. But the things we talk about, the opinions we give, and the charts we like or dislike, those are not to be construed financial advice, nor the opinions of trade ideas. They're our own personal opinions. And just if you don't realize it, if you add the two of us together here, we've got a combined about 50 years now of trading experience. So not bad for two-man booth, 50 years of experience, just so you know who you're talking with here. Um, please come to our daily trading room, whether it's with Barry, which is much more momentum day trade focused, not as much support and help in there as you maybe would want, but that's why we created the 12 Eastern. 3 p.m. was gone. We'll get rid of that. The 12 p.m. Eastern every day, one of the traders will pop into Barry's live stream and give him a break and totally devote our time and focus towards helping people and taking all the questions and answers. Maybe a lot of them that Barry wasn't able to get to. So if you're not aware of this, you need to come by and help your learning curve increase. If you want to know how to get there, just come to our website and /live. We'll redirect you to the live stream. So 12 o'clock Eastern every day. There's no reason now that you know about it, there's no reason you shouldn't be coming to these things if you're in front of the computer and if you're trying to learn new things. We'll keep going here. Just a reminder, we've got some ebooks out there that are available. You can tradeideas.com/strategy, which is an ebook written by Dave Mabe, who's a very unique person. He's a software developer, our director of software development, but he cut his teeth and started off as a trader. So we have somebody running the show here who is not only a trader, but the director of software development. Very unique skill set to find, and we've got him. And those are his thoughts in that ebook down there. And as we get to the constant reminder, in addition to me trying to tune back in, this webinar is really reminding people that it's a two-person or a two-entity job, the human and the machine. The humans really can't do it without a machine. Andy and I traded before trade ideas was even invented, and the technological leaps that we've seen since then are there. And trade ideas is on the cutting edge, of course, and that's the machine. But the machine is, not always good by itself. It doesn't have the human nuances. So it's a symbiotic relationship, no matter whether it's health or finance or trading or whatever. Human and machine combined are stronger than the human or a machine independently. And that's our theme. November 29th, December's right around the corner. Kind of following the same format. We'll go for 40 minutes or so, market recap. Definitely some things to look at there. Trade of the week last week, I had no involvement in that, so we'll look at it. It's one of the few times I've actually taken a trade of the week off. Usually if I'm out of town, I'll go ahead and still do it because I'm looking. But this, as I said, was a disconnect trip, so I was disconnected for the last trade of the week. But we'll take a look at this, and then CLNE was my pick. We'll take a look at that. Has not triggered. Time for another sector review. I'm going to pull up a scan that's still working and talk about the implications of it as well, trying to put the pieces together of what the market might do from here. And then assuming that maybe if the market does want to bounce from here, we'll get to all that. The short squeeze alerts could be interesting. So I'm going to set some alerts on my price alerts of good looking charts that if the market doesn't roll over and the market does grind higher, and we did see our double bottom lows recently, there could be some short squeeze plays out there. So we'll use our price alert tool, and I can share that with you guys as a cloud link as well at the end. So And then save your questions for the very end. We can look at chart requests. There's usually somebody or two or three that want us to look at something, and we're happy to look at it and give you our unbiased opinion. All right, so let's begin with the general market recap. We have not spoken 2 weeks. I will always defer to and start with the S&P 500. Again, actually, I should not say again because this is a new deal right here. But what I was pointing at was the 200-day simple moving average seems to have a say in what the S&P are doing. And I bet Andy is just dying for me to zoom out even more. You know it. That does is that gives us that channel. It's actually kind of almost turning into a megaphone, quite honestly. So let's talk about this. I again came back. I hardly have any positions at all. I got some money parked in PSLV in one account, and then I do have some active short NASDAQs in another account. I'll get to that in a second. But other than that, I've got a couple bids in here and there. I'm just kind of trying to get a feel for where we are in the game. But you know, when I zoom in, actually zoom back out, and I look at that, I don't care what old technical analysis trading book you read, usually this isn't a buy right here. You know, if you're going to play the channeling.com here and here and here and there on the buy side, really we should be buying down here and selling up here until we're proven wrong. So I'm not interested in coming in here and establishing a bunch of new long positions. Let's just start with that personal note. So the S&P SPY is having a hard time with its 200-day. Now, small significance yesterday. I think it's to be expected. There should be some selling pressure that came in. We didn't actually tag it, but we got some sell pressure yesterday, and we posted a closing daily candle under the rising 10 SMA. That always gets my attention. But we still have the backstop down here of the 20 and a flattening to slowly curving 50. So technically speaking, the SPY is still in a good general health position. It's basically just kind of trapped between these two moving averages. And then, like I said, it's certainly showing up in the downtrend channel. All right, if you can't see that channel, it's there. So I really don't want to trust trying to take a bunch of new positions when the general backdrop of the market is, you know, at the textbook, you know, caution level. And if anything, people are probably putting on some more shorts up here. I'm not saying to do that. I'm just saying I'm very cautious. I'm mostly cash and very selective with what I buy. So what the bulls need is a simple, you know, kind of a sideways flattening or a test of this 20 and then a recovery. If that happens, then, you know, maybe you've pulled the bow and arrow back. You got to pull a bow and arrow back to advance it, right? So, you know, maybe that's what shoots the arrow up and gives the big final test of the 200 a good run for its money. I don't know if that's going to happen, but for now we've kind of dropped back in no man's land. Let's look at the NASDAQ. And the NASDAQ, a little bit of a different story. This one has been relatively weak since spring. And I say that because the 200-day has a lot of space here, like the S&P didn't. Look at all the space we have here as the S&P is at its respective 200-day SMA. So relatively speaking, the NASDAQ and the tech stocks are a little weak right now. And this is the one that I actually, I got short. I was short a little bit back here and I put a stop in before I went to Mexico. And then yesterday I added to it. So I'm now double position in the SQQ. I'm not recommending doing this because technically speaking, this is a guess trade. I mean, I shouldn't necessarily say it's a guess trade. It just depends on how you want to look at it. If we zoom out on the Qs, we can probably see a bit of that that downward channel as well, right there. So I will be quick to get out, you know, if I'm wrong. But let me show you a chart here. Apple. I think we've all been hearing some stuff about Apple and China, and Apple really gave away its chart today. And we know what a bellwether Apple is to the big NASDAQ and S&P as well. But big breakdown here. Okay, I think there's some stories even to go along with this that iPhones are not being made right now with the unrest and stuff that's going on over there. But the chart is confirming a weakness in Apple. So I'm keeping an eye on that. So there's a lot of cross currents going on right now. And it's funny, we're going to back test something that really has been working on the long side. But For the time being, I'm going to stay in these SQQs, but I'm not going to let them go negative on me. I'm just going to wait and see if we get some more weakness. I think we've got the non-farm payrolls on Friday. Hopefully the market just doesn't wait around for that. But I'm doing something very unconventional here. All right, I'm shorting the Nasdaq above the 50. So I'm pretty much kind of breaking a rule here. I'm just kind of playing a gut feeling. Again, Apple kind of plays into that gut feeling. There's some individual breakdowns. Amazon can't find its footing after a rough time as well. So some of these individual tech stocks are still having a rough time. But other than that, just I am bidding right there. See, I like this stock BEAT. It's a new issue. It's interesting technology, but I'm not going to be the one to buy that fifth green candle. So I've got an actual limit bid and a couple of accounts with a price alert to tell me if I get hit. And I fully expect to maybe get hit on the open tomorrow. And that's going to be me buying off of the 10 SMA, buying a strong chart, not chasing it, buying it off the 10 SMA. That's one thing that I do have working. It's actually the only price alert that I have going right now, but we are going to add to those because we're going to look for some short squeezes as well. But I'll leave that one in there for you guys. Did you? I didn't get to the IWM yet. That's been kind of the real weak one as well. Actually, respectively, it's challenged its 200-day a couple times here, but it gave up its 20 yesterday and today as well. So a little bit of weakness over there as well. The S&P 500. It's probably most of the energy names and whatnot are keeping this thing above its 20-day and its 50-day, but some of the other stuff is starting to deteriorate. Yeah, you got me, Dave. Anything you want to add over there on this?
Yeah, speaking of the 20-day and the spies, if you go back to basically the 1st of October, or when we or I shouldn't say the 1st of October, when we finally got above the 20-day here, we've never spent 2 days in a row below it. So, and even when we did, it was just barely below
right
it. So
there,
that's definitely your bogey on this.
right. So that held, that held, that held.
Yeah.
That held the momentum line, but we broke our momentum line to 10.
So now that's what.
I feel like we have a date with this, and I might
do
even,
too.
I feel like, I might even cover some of the short on that one. I'm not really going for the jugular here. I'm just trying to jump the rope a little bit.
Yep.
Yeah, but the IWM also, yeah, technically closed below its 20, but the Qs, yeah, they actually got close to their 20 today. I kind of expect the Qs to come back and test their 50. But anyway,
that's definitely where the weakness is for sure.
Yeah, especially when you look at all that void space, relatively speaking, to its 200-day compared to what the others are showing. So that's why I picked on SQQ. And again, I got a great price in it before I left. Just left an open stop in it. I bought leg one, literally right down there, and then just kind of put my stop at a new low and went to Mexico, and then noticed yesterday we had a little bit of strength in there because the NASDAQ again closed weak. So I added to it yesterday. We got a close below the 10 again today, close below the 10. So maybe on some weakness tomorrow, I might start fading out of half of that because I really don't know where we're going to go from here. Everybody, I will say this though, is expecting the Santa Claus rally. I hear a lot of talk. I see a lot of talk, and the market has a funny way of disappointing the most people most of the time. So in the back of my mind, there's this little demon on my shoulder saying, hey, you might want to see if it's different this time. But I don't know. All right, we don't want to spend too much time on this. Let's move on. Is the RSP trapped too? Good question, Dave. Let's take a look and see. No, it's not. The equal weight is it's not trap. It's actually above, but it did give away its 10. So it's
Looks
interesting way to look at it.
like the diamonds actually.
Right. I'll put that up in a second. But again, I have a really hard time initiating new long positions at this end of a channel. And again, if anything, it's a broadening channel. It's a broadening megaphone channel, which means it gets crazier and crazier as you go on.
Oh yeah.
What was I going to look at?
Diamonds.
Thank you. Yeah, exactly. The Warren Buffett stocks, your father's Oldsmobile, the industrial. Technically holding up for sure. That's for sure. And they love to talk about the Dow on the evening news. The Dow was up today, but it doesn't really tell the whole story. Okay, so let's move on. What did I plan to talk about next? We're going to talk about the trade of the week. Now, what is it, Parr, Jack Parr, Chris, I think, came up with this one, and it did in fact trigger. Chris is now understanding how difficult sometimes this market can be when you've got a nice consolidation move. There was that fake out there on that one, but I'm pretty sure the trade triggered above 25, and it's given some back. So I did not participate in this one. I can see his reasoning for it back here. You know, it was holding a nice, probably looks something like that. But then the ones that even look nice, they just easily can just kind of give up on you. So not a whole lot to talk about there. CLNE was one that I came up with in discussion with Andy. What I liked about it was, again, where we are in the current market. There we go. I don't want to be buying breakouts. I mean, even if you were like waiting and pacing to buy this clean energy on a breakout of that, look at that. You went nowhere, and then you got tested, and you probably coughed up your shares somewhere down here. So again, it's a great testament to playing contrarian, whether it's your entries or your exits. We've got two solid lines here, the 200 and the 50, really holding on to. And then again, this is what the chart looked like going into the weekend. So now we've got 2 extra days of data here. And believe it or not, 640 has not triggered. So this one is still alive, and I do want to participate if it goes tomorrow. So I'm going to go ahead and put my price alert in there. So yeah, not a whole lot really to catch up on the official trade of the weeks. But CLNE is definitely on my radar. I like the fact, again, we've got earnings behind it. It had positive, initial positive response to earnings. And then, you know, this market has just been so noisy. It's just, you really have got to think contrarian. You can't chase the herd. You've got to find a spot that makes sense and use that as your entry. And so that's exactly what I'm doing in beat. Again, if you came late, you know, I like the story on the stock, and I don't want to chase. It's a kind of a low floater, but it for the most part held its moving averages. Now they're all fanned out again, but I'm not going to chase 5 green bars. So I just went ahead and put in an eyeball bid and a price alert on that 10 SMA, and I kind of expect to get filled on the open tomorrow. And so that's contrary. That's what I'm talking about when we're saying contrarian, which is back to the trade of the week clean. We're not looking to buy breakouts and have them just fizzle away. We're looking to buy solid areas of support, and maybe we'll get some good news and something will happen. But I am fully prepared to execute this one tomorrow if it trades through, and you could consider that too. Okay, so I did, yeah, let's just go through the sector view real quick. And then I've got a scan we can look at. So what is looking extended? What is looking weak? We'll start at the top here. SLX. Well, the steel stocks are looking pretty strong. See a couple things here. I see an absolute breakout of that channel. That's what the S&P bulls are hoping for, something like that. So steel is strong. You know, you got your US Steel X, CLF. Yeah, it's just above its 200, but not a bad looking chart. I'd keep an eye on steel, SLX. It's a good consolidation here, and it's consolidating above all of its moving averages. I'll go through a lot of these quickly. REITs, not really too much there. Gold miners hanging in there, but still below their 200-day. I am bullish gold and silver, but that's the commodity itself. You know, gold miners are a whole different story. Those are still publicly traded companies with shenanigans and boards and things, and they're still equities. But nothing really going on there. I would wait for the GDX to get above that 200-day moving average. It got held up back there. So a lot of headwinds there. Interesting in jets, but you know, I don't know how this is going to resolve itself. I would be surprised. Maybe it happens. Maybe we do break out of that, but it's a guess at this point. It's also a guess at the top end of that channel that you're kind of seeing there. What else we have? Home builders. They've been interesting. God, you know, there's just absolutely no reason on paper to be bullish the home builders whatsoever. And then you've got the chart kind of confirming that here. They're having a rough time with the 200-day moving average. Financials. Financials are above their 200-day, which is one of the reasons the S&P has also been kind of holding up better. Um, Higher interest rates may be helping them. I mean, technically speaking, financials have met all their challenges there, and it's trending higher. Not bad. So far, steel and financials not bad. Here's the OIHs. We're getting a cross in the 10 and the 20, and this was the play in par. The last week's the trade of the week. There's just the energy stocks are very difficult. Um, Bank stocks not the same as XLF, but banks still under the 200-day. Here's Andy's China. Interesting. Every night's a gap. You never know what's going to happen when you come in the next day with China stocks.
Exciting.
It's exciting, yeah. Get you out of bed in the morning, get your heart
That's
pumping.
right.
XLE looks like it's looks like energy, oil. I mean, rolling over and almost crossing there, so not much going on there. A lot of headwind in agriculture. Here's silver. I prefer to use PSLV, just as you know. SLV is pretty much one of the naked short games out there. The bank trading desks use SLV to create shorts out of thin air, but there's a fund called Sprott Silver Fund, which is technically not as strong as SLV, interestingly enough, but I don't care because I know if the shit ever hits the fan, these guys will open their vault door and say, we can account for every single share of ounces of gold that we have in circulation, whereas SLV is going to have a lot of explaining to do at some point, sometime. But I am bullish on the commodity of gold and silver. Just, I've been so for a while, but I've had to just kind of be patient and wait. I've been in and out of it. I'm back in it now. As I said, I'm parked a lot of my 401k in that PSLV along with cash. Retail. Oof. I don't know. I'm not betting on the consumer. I'm sorry. It's just too many headwinds and can't get above its 200-day. IWM, we looked at that. Same thing. Small cap stocks are kind of struggling there. Commodities. Here's the GLD, just like the stronger. Basically, silver is stronger than gold right now. Let's just leave it at that. So silver's outperforming gold. Some interest rate stuff. XLV, I remember talking about that 2 weeks ago, saying it was holding itself, and it's looks like it continued to hold itself and make a higher high and higher low. So far, silver, financials, and XLV healthcare are kind of interesting technically in terms of they've done everything that's been asked of them. They've broken through all of their key moving averages and or even down channels. Biotechs, I don't trust them. Semis, they're just getting slammed at the 200-day. So I usually like to try and come up with, say, 3 sectors to watch tomorrow. And there we go, silver, financials, and maybe healthcare. Might not be tomorrow, but these are the ones that are showing downtrend breaks and moving through their moving averages.
You said silver, but you meant steel.
Steel, sorry. See, I'm a silver guy. SLX. Dave was on my case too. You're right. I'm still getting my brain working. I'm still not out of third gear yet.
I hear you.
Off. All right, so let's pull up an old scan. I think is what I wanted to do. It's not the one we looked at a couple weeks ago, but this is the one that it's very interesting. So this is going to give me kind of a contrary argument to Steve. Do you really want to be short this market? Because I pulled and dusted off buy off of the 50 SMA. This is a long strategy, buying when the stock pulls back to the 50 SMA. And those are just the last ones that came through. But I pulled this out and I thought, well, how's this thing testing? So let's see. Did you have a question, David? This is good. Oh, way too many, Dave. Way too many down there, more than I care to admit. And earlier in the day that I care to admit. How did you find the trade of the week? Is there a method or just going through each stock individually? Dave, that's a good question. On this particular one, I was using a scan called Andy's scan. He created it. It's called pullback above the 50 SMA. I'm glad you asked this question because I did want to touch on it. Now, there's a lot of names on here. And how I chose to sort it was change in 5 days. I don't want to chase things that have been up in the last 5 days. I want to look at things that were down in the last 5 days. I don't think clean is going to be on here at this moment in time, but this was the actual scan that I ran, and I double clicked change in 5 days. So I didn't want to be chasing green sticks. I wanted to be finding things that are pulling back. as I said, that's the method. We were looking for something that had pulled back around the 50-day SMA. So I'm sure somebody's clamoring for this particular scan since it was asked, so we'll go ahead and just share that now. But that's a good question, Dave Napier. That's how I found it, and I will drop that in the chat window.
Looking at the next David's question,
Have,
and Steve and
have
I
it
are very
ready.
familiar with that. Yeah.
Let's see. I have an
Believe
out-of-the-box idea. Well, what?
I'll just mention it. Steve and I actually got in that business for about 3 years, buying distressed mortgages.
Oh gosh, I'm reading
Yeah,
now.
it's a rough business. If you're well funded and you have a good management team, yeah, you can do well at it. Uh, uh, the thing you got, I won't go too far into it, but I'm just saying, yeah, there is some opportunity there, but it's hard to get the good properties because all the major players, the Black
There's a lot of
Rocks,
sharks. There's a lot of
yeah, a
sharks
lot
in
of
that
big
second
boys are going to get all the
mortgage
best stuff. Yeah.
wholesale market. And Andy and I kind of made a mistake getting into something we thought we knew what we were doing, but we didn't.
Yeah.
So kind of a slow couple chapters of trading, but nonetheless, we were focused on the wrong things. But yeah, maybe send me. We were buying mortgages at 10 cents on the dollar after the
Yeah.
2008 bust. So we had a lot of people in Rust Belt in Ohio and
Hmm.
Michigan and Florida and that bought houses and took out $100,000 mortgage on it, and all of a sudden their house was worth 50, in
And
2011
we're buying them. We're buying the mortgage
at 10
for
cents on the dollar.
yeah, for like $5,000 and $10,000.
The problem was, if we had known, those assets didn't continue to appreciate with the rest of the real estate portfolios as they were in rougher areas in the hood. And also some of the people fell back on their old habits of not paying their mortgages again. So it was
Yeah.
a tough go. All right.
If you have a really good asset manager that knows how to, experience, that really knows how to turn those, the ones that you can't get the customers paying again, you got to be able to flip those properties quick. Otherwise, our
Yeah.
asset manager was not very good. But
No,
anyway,
and before you
no,
know it, you're getting letters and complaints. The grass is 3 feet high, and there's kittens in the yard, and
yeah.
you're 2,000 miles away trying to figure out somebody to get a boot on the ground and go solve that issue. Yeah, it's not fun.
Hmm.
Good question though. Okay,
Hmm.
so my concept was, let's go ahead and just back test this, pull back to the 50 again. I'm gonna, as I usually do, I try to open it up and see how it looks. So time to exit. This is a swing trade, by the way. We're back testing a swing trade here, guys. So we're going to sell it the day after tomorrow at the open. So it's a kind of a day and a half hold, or yeah, day and a half hold. The risk management, since it's a swing trade, let's say we're going to risk 2.5% to make 7%. That's a pretty good risk reward. Advance, I've just been using like the last 25 days lately, the last 30 days, because I want to just kind of try and stay with what the market's been doing. It's very easy to get a bifurcated result where the first 60 days it did first 30 days it did horrible, but the second 30 days it did great. Market does change that quick, and so you've got to be nimble. You can't just be dogmatic and say this one scam is going to always work for me. All right, so we simulate a buy. It's a new low. I kind of forgot to show you. We can do that real quick. Configure. We're looking for new lows. Looks like I've got some optimization in here already. We're looking for new lows at the 50-day moving average. All right, so this is our initial run, and it's a pretty darn good summary. 199 trades, that's a lot of trades over 25 days. Average winner, almost $2. Average loser, $1.12. Not bad. Strategy return, annualized, pretty darn good. But from here, we always want to just double check and look and optimize at least the time of day. And let me see something here. Yeah, I'll go back to 30. And I'm just going to notice that the first half an hour of the day is very difficult, and our returns aren't that great. But we've got a lot of chunky trades in here that aren't really doing that much for us. Then the second half hour passes. In the third hour, this is 10:30 Eastern, we start to get some green. Well, I want to pick up these trades, so I'm going to run this again at and start it at 8 o'clock my time, and let's see how that improves I did not want to simulate buy until I changed that to 8 o'clock my time, 11 o'clock Eastern. Simulate buy, and then we can compare and contrast the two summaries here. Moving in the right direction, darker green down to only, we cut our trades in half. We went from 54% to 56. Average, oh, look at average winner jumped up to 233. Average loser went under $1. So just by that one little optimization, I'll tell you what, guys, there's something behind it. You know, the algorithms run this market and they're all programmed. I don't care who you are, how you trade, but you know, the first 5-10 minutes of the day is noisy as anything, and especially back testing. You don't want to try and back test something in the first, you don't want to back test something in the first 15 or 20 minutes of the day. It's just not reliable. And Dave, this, Shannon, this is an alert window, so I'm going to share it with you guys. So just a quick, again, like I just did a quick shot of how important it can be to literally just go in and optimize your time of day, because as I was saying, these algorithms are very predatory. And by cutting the first hour out of the day, we improved our performance a lot in terms of the average winner, average loser, and not so much noise and less trades, just better across the board.
How many days are you back testing?
I was back testing, I think, like 27, 28 days.
Okay, that's the key, guys. I mean, if he went back a full 65 days, you know, it would. The key to a lot of these strategies is when to implement them. You know, so
Exactly. Just for
yes,
fun, let's do it.
yeah,
Just for fun, let's see what going back 60 days does to this. A lot of people think I want as many days back as possible. Well, I've mentioned before, you're kind of like a baseball manager. You got to know what the score is and what the momentum is and what you want to deploy and what you want to keep on the bench. So let's simulate a buy, same strategy, but what happens if we go deep into the selling that we had earlier on? Then we got into that bounce when the market was bouncing. So the point is we're bouncing in the market, and I want to see what's
right.
working when we bounce. Look at that. See, there's the tale
Hmm.
of two tapes right there. This strategy does not work when the market is selling off horribly. But when we start to bounce and work our way through moving averages,
Yep.
this strategy works. So this is actually telling me, believe it or not, be careful, Steve. Be careful with your short, because the data is not lying to you. The data is saying buying stocks on a pullback to the 50 and holding them for a day or two is working. The data doesn't lie. And again, I think it's a good example of why you don't always want to just do the full 60 days. You want to kind of look at the market and see, you know, what's it done recently? What kind of pattern have we been in recently? Okay, well, yeah, for sure. We've kind of been in kind of a bounce pattern here. So this is what I want to focus on. If the market gives way and starts to just, you know, crumble, then you got to throw this scan out the window again. But if the market does dig in and start, you know, holding and making an assault higher, this is a kind of strategy trade that could give you some good ideas for swing trades. So let's first go ahead and share it. All right, you pull back to the 50 and it's an alert. So you're correct, Shannon. You cannot back test a top list, but the alert, we can back test that event and the moment it came out, and we can just kind of reverse engineer from there. All right, I'm going to quickly go through, as I said, if the market wants to continue to dig in and move higher, and the buyers want to continue buying this market, hopefully I'll be smart enough to get out of my crazy rule-breaking short. But the point is, if that does happen, well, the short sellers are going to realize, oh boy, I was wrong again. And when you get the sellers saying I was wrong again and running for the hills, that's when the short squeezes can happen. And that's what this is for. So, you know, I was not looking at this top list at all 2 months ago because everything was making new lows. But once you get into a point where the market is starting to frustrate the shorts and catch them off guard and catch them leaning the wrong direction, like a big gap up when everybody thought we were going lower, you know, this is the kind of time you want to start looking. So what I'm going to do is I'm going to go through these one by one. Just because they're on here doesn't mean you buy them for a short squeeze, but they are sorted. So the ones at the top in the dark green have the biggest short float. I want to see these ones have a good chart. And so far, the first two don't have anything to show me. Car, I think, is going to be an interesting one. For some reason, Avis, it's an expensive stock at 200, but for some reason, it's got a high short float. And I think I would put it right here. If it can get back above that prior pivot point, it looks like, you might want to take a look at a possible short squeeze. We're showing 38% short of 47 million. It's holding up, but it's a little under pressure. But if it does break through that, it might be worth noting in real time. That's a tough chart as well. The reason I like that Avis chart because it's going up. I don't want to pick things in downtrends. All right, Rocket Mortgage could be interesting. Everybody thinks that.
Doesn't look bad.
Yeah, it doesn't look bad at all. I am going to mark it up, so I'm going to put it. I'm going to put it right here, probably at 8. I don't know why I'm picking a round number. I just am, but if it can hold that 8, it's probably a straight shot up here to 8 or 9, where that 200-day moving average is. We've got 35% short the float. So, I mean, if you wanted to, you could move it down to just above today and see if you get any follow through. We could try that right there. All right, let's take a look at a few more. And while I'm doing this, guys, after I finish this, we can look at anything you want, any charts you want. So this chart is trying to recover. Its problem is it's a pharmaceutical, but it still has a nice high short float. So there's nothing wrong with it. I think marking that pivot level right there just to watch it, see what happens. Now, I'm really only going to focus on the top ones here. ASO, we've tried to play this one before, Academy Sports and Outdoors. Boy, it is a strong chart, isn't it?
Just
Here's what we're
nasty.
going to do on this one. We're just going to say buy the pullback on this one. Actually, yeah, there's no reason to at least buy the pullback at that level. Kind of lean on that.
You need to change that to long. You had short still, but
thank you. Yeah, I will. So is beats along too. I might as well change that. Those are both pullback alerts with the intention of going long. Okay, so we got ASO in there, FSR, not a great looking chart. VTNR, another oil company. I can see these oil energy companies just slowly rolling over. I have no trust in them whatsoever right now. Blue, electric, blue. Ooh. Yeah, I've been watching this one.
Yeah, we've been in it actually.
I've been in it. Yeah, I actually have too. Yeah, I bought it down here, and then I think I scalped out of it really quick. But it's a tight little range there, isn't it?
It is.
I'm gonna go ahead and mark that up only because it's really fighting the good fight. There we go. I'll do a few more here, and then we'll take a look at. Of course, we'll look at Costco, Dave. Redfin. I'm staying away from that one. Real estate, crap. So now we're starting to get into the smaller numbers here of not so much short float. Siri, I wouldn't touch that. That's an acquisition, downtrend. Yeah, Chewy. That's probably going to be it for the short squeezers. I don't trust a whole lot more down here. Again, I want to exploit the ones who have a high short float because it makes sense. We have a higher probability for catching a squeeze when we've got more people in there. 1, 2, 3, 4, 5, 6, 7, 6 of which are short squeezes, and 1 is a pullback into beat, which I'm just going to be looking at to buy tomorrow. So I'm going to share these 7 price. No, let's try that again. I'm going to share these 7 price alerts. And if you load these, you can have them trigger for you as well. All right, looks like the price alerts came through. All right, we'll look at a couple of charts if you want on the way out. Dave's already posted one. Need I ask? Costco. Yeah, so Costco is definitely where the retailers are going, and the chart does confirm it's one of the strongest retailers out there for sure. The only thing that concerns me, Dave, is just this bigger picture here. I'm sure you see that. So you've got one thing and one thing only to lean on, which is, you are correct, is the 10 SMA, but I wouldn't give it much. If it closes below that 10 SMA tomorrow, it's probably got a date with some consolidation and pullback. But I will be going there on Friday to get my $80 Christmas tree. You can count on that. Okay, well, looks like everybody probably got that information I dropped in the chat window, and we did Costco for Dave. Does anybody have any other charts they want to look at? Otherwise, we'll call in Scott for any announcements or upcoming sales. All right, I'm going to take that as we're all good on. Oh, AMC. Well, I know exactly what I'm going to say about AMC. It's curiously holding up. I like to say, does the chart confirm the story? Well, yeah, we all know the story. AMC has been putting in some constructive work here the last few days, there and there, and then look, it doesn't want to give up its 50. That's very solid. So we got the 20 coming up to cross the 50. So I'm seeing a pretty tight flag range in here. I think if you were to mark up like that 8 level and this thing blasted through and you saw the relative volume was off the charts above 8, could be an interesting day trade. It's a pivot level actually going all the way back to here and there and there and there and there. So anything above 8 with some good relative volume could be interesting. It's just how far it wants to follow through is up to that. I know it looks a lot better than the ape chart. I have no idea what to say about that thing, but AMC is curiously flagging and holding in there. It's putting up a fight. All right, we'll do okay, a couple more. So we'll do a TMDX for Ken and ONCS for Stuart. Then we'll bring in Scott. So TMDX. Transmedic. Interesting. This sounds kind of like BEAT, B-E-A-T. You might want to look that one up. Electrical medical device. So you had earnings, gap up, and ever since earnings has been holding its 10 SMA. This looks pretty strong. With earnings behind it, it does look pretty strong. Not small float, 29 million. I mean, if you know a lot about this company, you just need this 10 SMA to hold. Again, if the 10 SMA doesn't hold, that's why I call the 20 the backstop. So if that breaks and closes below, you probably got a date with that rising 20. But interesting, not bad. That's a solid looking chart with earnings behind it. All right, last one before Scott. ONCS. Horrible downtrend, another medical company. Yeah, so this one is nothing like the one you showed me earlier, where I looked at it earlier with Ken. The only thing you got going for it is giant volume down here. Maybe there's a story, but this is down and ugly for a reason. I don't know what's going on with that volume. Maybe you do. You can probably dig into it. But the first order of business, it did close above its 10 SMA today on giant volume. You might have a relief bounce in there, but I tend to not like to get too bullish on things that are trending that badly downward. All right, one more. USEA for Jacques. Oh, and plug. USEA. USEA broke out, earnings behind us, big volume. They must have had news. Great breakout there. Hopefully you were long before the breakout, or you at least bought earlier today. There could be some follow through on that tomorrow, and then before profit taking, you never know. But it's nice to have earnings behind it.
You might can zoom out a little bit to see where it could
Yeah.
possibly go.
That was
got
an
a nice
interesting
gap there. Yeah.
Yeah, big gap there. So that's at 430.
Yeah, I could very well go there. Easy.
You could have a day trade to 430 if this thing follows through tomorrow.
Mm-hmm.
All right, last one, plug. Who was looking?
Yeah,
I've
been looking too good lately.
Yeah, you were looking at it, I think.
Yeah.
Yeah, it's downtrending and it's getting caught up in its moving averages again. This is what I call like the basketball, the bouncing basketball. It just bounces, and kind of looks for the crack in the ice. So it needs to do something quick and turn around and hold that 15 level. But technically, it's pretty weak.
Mm-hmm.
All right, you guys are welcome. So let's go ahead and bring Scott back in. I'll put my slides back up, and we'll talk to you guys again in 2 weeks.
Yeah, sounds good. A couple things on the way out. We have a partnership with E-Trade, and we directly connected them with our Brokerage Plus module. So you can connect your Brokerage Plus within Trade Ideas to E-Trade for one-click trading from within Trade Ideas and zero commission. Also auto trade using Brokerage Plus. We've got a similar arrangement with Interactive Brokerage. They are not commission free, but they have a really great platform, and it connects to our Brokerage Plus. They're one of the more reliable brokers out there, and I think they're the most popular broker with our subscriber base. You can learn more about becoming an Interactive Brokerage subscriber at tradeIdeas.com/IBKR. We've got a code for 15% off your first month or year of Trade Ideas. Fast data is good for 15%. You can also use this if you're on standard and want to do an upgrade. And of course, you can find us on you can find us on YouTube or /Trade Ideas. TI Steve G is Steve's handle on Twitter. We're also at Trade Ideas and some other handles you find if you follow us. Trade Ideas Pro is the handle on Facebook. Steve is TikToking away on at Today Trader on TikTok. And of course, if any questions, email us info@tradeideas.com. And we will reply as soon as we can. It goes to our support desk, and you'll get the help you need. The recording will be up later on tonight or tomorrow. And you'll find it on the YouTube channel. You get an email reminder tomorrow, the link to where you can find it. Thanks, Steve and Andy. Have a nice one.
All right. See you guys next time. Thanks.
Thanks, everybody. I'll see you on Thursday.